Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, we're very pleased you have joined us for today's battery and precious metals presentations. Our next live presentation comes from Doré Copper Mining Corp. Before I introduce our speaker, a few points to note. Please submit your questions in the question box to the left of the slides. If you are interested in scheduling a meeting with Doré Copper Mining, please click on the Meetings tab found on the left navigation bar. You'll be able to view the company's availability and submit a meeting request. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome Ernest Mast, President, CEO, and Director of Doré Copper Mining Corp., which trades on the OTCQX Best Market under the symbol DRCMF and on the TSXV under the symbol DCMC. Welcome, Ernest.
Thank you, Matt. Pleasure to be here. Thank you for everyone for attending our talk today. And I will be going through our company, Doré Copper Mining Corp, during the next half hour or so. Some forward-looking information that I'll be making during the course of this talk. When we talk about Doré Copper Mining, in reality, this conference is almost made for us because we do have battery metals, copper, and we do have precious metals in the form of gold. So we're kind of unique in that respect that we're both high grade copper and gold. Another important point regarding the company is the fact that we're located in North America, in Quebec, in Canada, a very good jurisdiction. We have existing infrastructure in place as this was a previously operating mining camp. Our team's highly experienced with numerous years working in the copper and gold industries, mainly throughout the Americas, but overseas as well. Finally, we have a PA. The PA in place highlights a very robust project, 180 million Canadian dollar capital cost, after-tax internal rate of return of 22.1%, all-in sustaining cost of US $2.24 per pound, making us a very robust operating company. And during the talk, I'm going to go over these 4 points in more detail and, of course, talk about our assets. Capital structure of the company, currently have a little over 87 million shares outstanding. The company has no debt. The company has a small amount of warrants and options outstanding, so the fully diluted number of shares is 92 million. We have coverage with Cormark and Paradigm. 50% of the company is controlled by our major shareholders. This includes Equinox Partners, Ocean Partners, insiders, different institutions related to the Quebec government, including the Quebec Pension Plan. So the company has a solid shareholder structure and is well set up from a capital markets point of view. We went public at the end of 2019, and we were also then listed on OTC in 2020. So it's a relatively young company with a little more than 3 years of history in the company. When we talk about the company, I'm one of the founders of the company, along with Mario Stefano and Ewan Downey. The company was founded as a private company in 2017, and then, as I mentioned, we went public at the end of 2019. The board of directors of the company is a good mix of technical, financial, and community experts. I think that gives us a balanced board, and I think it's going to help us immensely as we move the project and exploration activities forward as we move forward. So we're here to talk about battery metals, and our main asset or our main commodity is copper. Different studies have come out on copper over the last few years. Most recently in 2022, we saw Goldman Sachs and S&P come out with some very, very robust copper demand and issues with copper supply, resulting in a very large deficit at the end of this decade. They pegged the deficit at over 7 million tons. Previously, people were pegging that deficit at 5 million tons. So obviously, with that type of large gap in supply and demand, there's going to be a lot of pressure on price. A lot of studies have been done in terms of how we can substitute copper. And one of the ways where that's going to happen is that at a high price, people will start looking at alternatives. Certain applications of copper can be substituted, but that's only going to happen in a high price environment. And that's what people are projecting. So the projections for copper are extremely, extremely bullish. On the demand side, with copper, we have electrification occurring all throughout the developed world. And even in the developing world, you see countries leapfrogging the route that the developed world took, where instead of large thermoelectric plants for powering, there's going to be a lot of renewable power. Renewable power is very copper intensive. Electric vehicles are also very copper intensive. And with these technologies or these forms of energy and transportation being put in place, there's going to be a surge in demand of copper in lots of applications. And that's just going to continue the increase in copper usage, and the demand is going to be struggling in order to keep up. When we talk about our projects, I'm taking us now to the Chibougamau area in Quebec. It's located about 500 kilometers or 300 miles due north of Montreal. We're very fortunate in the area to have excellent infrastructure. We're connected to the Quebec and Canadian highway grid, the Hydro-Quebec power grid. We have commercial flights to our town, and we're also serviced by Canadian National or CN Rail. So very good infrastructure. So when we think of our project, this is not a remote project. It's not going to be fly in, fly out. It's going to be a residential project, and all the infrastructure for getting to our sites is in place. That's going to give us advantages in terms of the capital cost of the project. The PEA, which was completed in May of 2022, highlighted a scenario where we would have 3 mines feeding our Copper Rand mill. We would start the project with the Corner Bay and Devlin mines, which are principally copper mines. And then when Devlin becomes depleted, we would pair Corner Bay with Joe Mann, and Joe Mann is principally a gold mine. The project would start up in that manner and would have a 10.5-year mine life. And then if we look at the economics of the project or the parameters around it, we used the 375 copper price, which was a lagging 24-month average at the time we did the project. Eventually, the project, as I mentioned, would run 10.5 years. We'd have 53 million pounds per year of copper equivalent production, about 85% in copper, 15% in gold as copper equivalent, initial capital of $180 million Canadian, and then an after-tax NPV of 193 million, 22.1% rate of return. Currently, the copper prices are a little bit over $4, and they've been around the 4.10 for the past month or so. And at those prices, we see the project even more robust. An internal rate of return of 27.2%, and after-tax IRR of $269 million Canadian. The project was developed without much emphasis on tax efficiency, and so we do believe there's a few things we can do to make the project more tax efficient and get the after-tax NPV over $300 million, making it an extremely robust project with a lot of other positive attributes. When we talk about the attributes of the project, one of the things to mention is this is going to be a low-impact project. We're doing high-grade underground mining, which again, you're moving and processing a lot less tons to produce your copper. Infrastructure is in place. We are connected to the Hydro-Quebec grid. Therefore, we're going to have very reasonably cost power through the life of the project. We do have road connections to all of our sites. There's rail connections in the site, and we do plan on utilizing that for bringing in some consumables and shipping out our concentrate project. There's underground infrastructure in place already. There's ramps to the Corner Bay project and the Devlin project, and there's a shaft and hoist in place for Joe Mann, and then we have a processing plant in place. And we've also are working in an area which is accustomed to mining. The town of Chibougamau was built in the 1950s as a mining town. And still a lot of miners in town who actually are not working in Chibougamau now because there's no active mine, so they're working remotely. And we've had many people inquire about the project indicating that they would love to start living at home again and working at a mine. So, they're very supportive of us getting this project restarted. Currently, as I mentioned, we finished the PEA in May of last year. We've jumped directly into a feasibility study. The reason why we can do that is because with the infrastructure in place, a lot of the questions you would have during a PFS is, where are you going to put exactly the tailings? Where are you going to put the mill? Where are you going to put your ramps? All those questions have been answered for us. The metallurgy of the project's quite straightforward. It's a chalcopyrite clean material, so it's very standard type of flotation process. So again, we don't have a lot of permutations to look at in terms of the processing plant. And so starting to work on the feasibility study, the main emphasis has been on the feasibility study parts that are related to getting the permit. And these would be baseline studies on hydrology, geochemistry, on soils, and other environmental type related parameters. So we have submitted our permit to the Quebec authorities, and we're actually waiting for a directive from the Quebec government in terms of guiding us to prepare the ESIA. Concurrently with doing that feasibility study work, we are doing exploration drilling in the camp, looking at areas where we can expand the resource, either treating more material per year or extending the life of the project. The largest part of the feasibility study, which is the infill drilling at Corner Bay, we've currently put a hold on that as we advance these other important aspects of the project. An important part of the project is the mill. The mill's in place. It operated from 1959 to 2008. There were a number of building expansions. So during the PEA, we had a good look at the mill, and we determined which parts or which components we're going to keep and which components we're going to replace and put in new equipment. The final repair cost for the mill is $24.6 million, and this includes putting in a new 1,500 kilowatt ball mill in an existing space in the building. And we're not going to use the rod mill and 4 ball mills that were used previously in the mill. We're putting in a new crushing circuit related to an ore sorting unit at Corner Bay, and therefore we're not going to use the crushing circuit at the mill. We're putting in modern equipment. So at the end of the day, we're going to have a modern mill that is going to operate from an energy efficiency standpoint and a manpower standpoint and a process control standpoint at a very high level. In the PEA, we had an average concentrate grade of 23.7% over the life of mine, and we think we can do better than that. So we're currently doing some testing. We've done some ore sorting testing, and then that pre-concentrate from that ore sorting test, we're going to do metallurgical studies or flotation studies on and look to get an updated number on the concentrate grade, which has a pretty big impact on the economics of the project. We see in these diagrams some photos of the mill. So what we did in the mill is we repaired the roof, we put in new LED lighting, we sanded and we painted the equipment that we're planning on keeping. And we've put in actually some heating, and we're currently working in the mill doing some removal of old equipment over the course of this winter. You can see it really is a showcase when you go into the mill. You can see it looks like a new mill. And in fact, we took some of the former staff of the mill who worked there in 2008, and they walked in the mill and they said, wow, we've never seen it look so good before. So we're really happy with the work that we've done here. And really what it shows is that we have a great head start with this project, and we save in a tremendous amount of capital with our project by having the mill building in place. We estimate we're saving at least $50 million on the mill cost. For tailings, we also came up with a very, I think, ingenious solution. We're going to filter the tailings. The cost in the PEA for the filtration plant, $17 million. I think we can do better than that, and we'll look at that in the feasibility. But the key to this is that we're going to filter the tailings and place the tailings on an existing tailings facility. This is a facility that was last used in 2008. We currently sample the water from this existing facility on a weekly basis You can drink the water coming off from this polishing pond. And by putting in this type of tailing solution, we really do not introduce geotechnical risk and a very low environmental risk, and we're clearing very little new land for this tailings implementation. And the capacity here is actually almost 3 times what we need for the PEA numbers. Now, one of the advantages of ore sorting is that you end up decreasing the amount of tailings that you're going to use. So we've come up with a really nice integrated strategy for the project, using ore sorting, repairing the mill in such a way that we take advantage of what we have, but yet we're upgrading the mill to a modern 2022 or modern 2020 standard, and then we're using dry stack tailings and minimizing our footprint, making this a very, very, let's call it a very, very low impact project. Now, if we're talking about the mines in specific, our major deposit is the Corner Bay deposit. This is a shear vein deposit. The deposit extends about 1 kilometer in depth. It has a strike distance of a maximum of over 1 kilometer and an average thickness of 3.5 meters. And the deposit is pretty well vertical. This makes it an ideal candidate for long hole mining. We're going to use long hole with pillar, and we're going to use a long hole Avoca method for mining the deposit. We get to a maximum of 2,600 tons a day over the life of mine. There's going to be the crushing and ore sorting circuit at site, and you can see the image on the bottom left-hand corner, which shows the semi-massive and massive style of mineralization that we have. The Corner Bay deposit has underground workings to a depth of about 115 meters. And there was a test sample taken in 2007, whereby 36,000 tons were mined and milled, establishing a 94% copper recovery at the time. And the graph here shows the growth of the Corner Bay deposit under Doré copper management, where when we inherited the deposit, there was 1.5 million tons in resources, and we've expanded that to about 8.5 million tons, always keeping the grade above 3.3%. Right now we have an average resource grade of 3.19%, making this the highest grade plus 5 million ton deposit in North America. We've been doing infill drilling over the course of 2022 upon finishing the PEA. 38,000 meters were done. We had a number of very good intercepts, such as the one shown here, 6.7 meters at 5.4% copper, 10.9 meters at 4.24% copper. And that hole, both of those holes had about 0.5 gram gold. And quite interestingly, one of the holes had 1,200 ppm moly. And most of our drill holes returned very decent moly assays. And we're going to look at producing moly as an additional byproduct. We've estimated that we could produce maybe 400,000 pounds per year of moly. Moly currently is at an all-time high of $40 US per pound, meaning we could potentially have a byproduct of approximately $20 million Canadian per year. That would really enhance our economics, and that's something that we're currently looking at. Close to the Corner Bay deposit is the Devlin deposit. The Devlin deposit and the Corner Bay deposit in the PEA will commence at the same time. They're located in a similar environment. However, geologically, the deposits are different in that Devlin is a horizontal deposit about 90 meters, 100 meters in depth. There's an existing ramp, and we would mine this with a drift and fill and room and pillar strategy. Devlin would have a mine life of about 4 years. The grade is lower than Corner Bay. The average mine grade at Devlin would be about 1.8% copper. Both Corner Bay and Devlin have very low levels of other impurities, resulting that our copper concentrate will be very marketable as clean copper concentrate all over the world. We're going to do a 2,000 meter infill program at Devlin, and that's going to allow us to upgrade all of the resources to indicated as we move forward. And then the Joman deposit is the third deposit in the PEA. The Joman deposit is located about 60 kilometers from the mill. It's a past producing high-grade gold mine, having produced 1.2 million ounces at 8.26 grams per ton gold and 0.25% copper. There's currently 133,000 ounces at 6.8 grams per ton in resources. We do believe that when we get to drill the open spaces underground, we should get to 400,000 to 500,000 ounces of gold. And as a result, Joe Mann could contribute a byproduct of 30,000 or 40,000 ounces per year of gold. In PA, we only have that for a few years because of the limited resource. But when we do put it into operation, eventually we anticipate having a much larger resource. And it's going to really give us a very strong gold byproduct credit. And that's going to drive down our cost, probably making us a cost producer in the first quintile. Close to the mill is what we call the central camp of Chibougamau, and this is where historically 1.6 billion pounds of copper and 3.2 million ounces of gold were produced from, say, a number of mines, maybe 13 mines in total. We control the majority of those properties, and within this camp there are some exploration opportunities. So a very good opportunity is the Doré Ramp Shear, which is the westernmost shear that you see, located on the south side of the Lac de Ré Fault. The Copper Rand deposit was the largest deposit in the camp, produced 16 million tons at a little under 2% copper and 3 grams per ton gold. So this camp is a very high-grade copper gold area. The Doré Ramp deposit, we drilled it in 2022. It was the first drilling done on the site in 30 years. We had a great intercept of 4.37% copper and 0.87 grams per ton gold over 2.4 meters. And we've done some follow-up work since that intercept, and we're currently waiting for one assay, and then we're going to come out with a very interesting press release on what we have rediscovered at the Doré Ramp deposit. The Doré Ramp deposit is one of a number of shears, and we do plan on exploring all of these shear zones. We have other targets also that I don't have enough time to talk about in the central camp that are also very excited. And all of these deposits are a very nice high-grade combination of gold and copper. And that's why Doré Copper sits very well in this conference where we talk about critical metals and precious metals. And so finally, this is a rehash of the first slide where I talked about the 4 points that really make Doré Copper stand out from its peers. Again, a very good jurisdiction, Quebec, Canada, high-grade copper and gold with a lot of exploration potential, an experienced team in place, and then the PEA done, showing us a valuable project, infrastructure in place. And then on top of that, I'll add the fact that we have good financial partners, including the Quebec government. The Quebec government have a program where not only do they invest equity into companies, but directly the government will look to provide debt financing. That would be Investment Quebec, which is part of Resource Quebec, as well as the Caisse de dépôt, which is the Quebec Pension Fund. I was speaking with them, in fact, just 2 days ago. And as we advance the project, we're going to start the debt discussions. And that's going to take a burden off the shareholders as we look to build this, because at $180 million capital cost Canadian and some probably lead debt facilities, this is a project which can be built, it should be built, and it will be built. And then on top of that, we have all of this exploration potential. So currently we have the 53 million pounds per year of copper equivalent over 10 and a half years. I think when all's said and done, we're going to see much higher annual production, and we can see it for longer than we put forward in the PEA. However, we are well positioned to take advantage of high copper prices, which we do believe are coming, and then we can be nimble and agile, finish off the feasibility study, and then look to get into production while we continue to evaluate opportunities for growth in our camp. So that's the presentation. Thank you very much. I'm now going to take some questions which the audience has presented. So so we have a mining question here, and the question is, by filling chambers, is it feasible to recover pillars? And so the answer to that is yes, we can do that if we decide. However, the long hole with pillar method we're using at Corner Bay The idea of using those pillars or using that mining technique is to turn over the production as fast as possible and move to the higher grade parts of the ore body as soon as we can. So again, that is an open option for us. However, it's not, we'll do what's the best economically when the time comes. So the original CapEx is the original CapEx of the project is $180 million. And then there's a question on the closure cost. The closure cost that we used is about $50 million in the project, and that includes the closure of Corner Bay, Devlin, Joman, the mill, and the tailings facility. Another question is regarding ESG of the company. As with all companies these days, ESG is a very important part of our project. We do have a head start compared to almost any other project regarding ESG, because the carbon emissions from this project are going to be very low due to the nature of the project. High-grade underground mining based in Quebec, and using an ore sorter is another great way of minimizing one's environmental footprint. Regarding other aspects of ESG, there's great social acceptability of this project. Chibougamau, being a mining town, is actually wanting to have the mines restart in town. I've had many discussions with people in Chibougamau, and inevitably they've had a father, a brother, an uncle, a friend who worked in our mines. And really, our project is part of the DNA of Chibougamau, and so we'd be honored to be able to restart it. Let's see, another, I'd say a project regarding the valuation of the company, which is obviously an important issue, and we're relatively we're low valued compared, or the market has given us a low value compared to what the value of the project should be, or the value of the company should be. And the question is, why is that? And I do believe the market is not that much in favor of projects moving forward to construction. The market would like to see projects on an expansion or on a trajectory of growth. And that's why we've kind of balanced the development of the project with the continued work on exploration, where we're going to show the market two things. First of all, that we're fully capable of executing and building this project, but at the same time, with the current exploration going on, the project eventually will be bigger than what we're presenting here and can be more robust. So that way investors can really play, or investors can participate in the project in two ways. One is a growth story, and two is a story that at a very reasonable capital cost, we're going to be able to take advantage of these high copper prices. If we have an average production of 53 million pounds per year of copper equivalent at $2.26, $2.24 per pound, at a price of copper over $4, the company will have free cash flow of $100 million per year. And we compare that to the current market cap of approximately $25 million Canadian. We definitely see that there's very strong value in the project. So I would say those are the questions that I received. Again, I have about a minute left, so I'm going to sign off. Thank you very much for attending. And if you have any further questions, please feel free to reach out to me, ernest.mast@dorecopper.com. Thank you very much.